Hi, Todd VanDenburg here with VanDenburg Capital Management and our first weekend Uncommon Sense update. So what has me putting out a video on the weekend, you might ask? Well, unless you've been sleeping the last few days, there was a pretty harsh move in the stock market. Thursday, Friday, the markets were down roughly 10%. It was a pretty big move by any measurable standard. And sort of oddly enough, the phone calls, messages, emails I've been getting have been sort of split, which sort of makes sense given that our population is politically split down the middle. Half the calls were, oh my gosh, what are we going to do? Is it going to zero? What can we do? Oh my God, just fear. I mean, people are just alarmed. And on the other side, it's like, oh my gosh, they're also disappointed that the markets are down. But they're looking at it as a buying opportunity because they're not seeing this as something that, is going to last a long time or is grounded in any sort of data or math. So, I guess it's just the way of our country these days. But what I wanted to come today and provide some insight on is, what we're thinking, where we see this going, what's happening. Is it reasonable, unreasonable, that kind of stuff. So again, as I mentioned, the Thursday, Friday, the markets were down big. Oddly enough, I don't really sleep much when, the markets are down like they are now. And, in the middle of the night, what was it, early morning Friday, I was watching and like the NASDAQ futures were up and the Dow futures were only down a little bit. And then I decided to get a couple hours sleep, before I got up to be up when the markets were open. And by the time, in just a couple of hours, the Dow futures were down, the NASDAQ futures were down, the Dow futures were down at that point, like 1,200. So what that says is that, this isn't about, data. This isn't about some math-based calculation that says, the US economy is on the verge of collapse. This is a knee-jerk reaction to a tariff regime that is by any measurable standard unprecedented. Even though the Trump administration during his, the first term, they did use tariffs a lot. They used them as a negotiating tactic and as a club, for lack of a better phrase. This time, the amount of the tariffs and the number of countries it's just bigger. And what nobody could know in advance of them announcing it, on Thursday, Friday night or Wednesday night, the days are all blurring, was, what was the magnitude going to be? How bad was this going to be? And what's the real impact? So let me talk about that for just a second. So first off, a 10% drop in the market before anybody's, had their gas prices go up or grocery prices go up or, the cost of a new TV go up. None of that's happened. And what we did learn during the first Trump administration is very quickly after tariffs are announced, countries start, coming to the United States and saying, okay, what can we do? We're sorry that we've been putting tariffs on your products when you try to sell them in our country, but we still want to sell in your country. So what can we do? And before I go too much further on that, it is a universal fact. Every economist acknowledges that almost every other country in the world puts severe tariffs on our goods and services when we try to sell into their country, far in excess to anything we might do to them when they're selling their goods and services in the United States. This has been coming on for decades. It's something that politicians do. We just say, hey, we want a free market economy. Capitalism works. So, let's not, tariff these other countries because, they're our friends and we want them to be allies. These other countries, and some of them aren't our friends or our allies, but, even in the United Kingdom, they tariff the heck out of U.S. products and services when we try to sell them there. So it's not been a fair playing field for U.S. businesses for a long, 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 long time. Now, is the way in which the Trump administration is going about addressing that problem, is it reasonable? Is it moderated? No, not by any measurable standard. It's I've heard several people refer to the Trump administration like a bull in a china shop. Even Elon Musk, the guy who's running the Doge team, talks about move fast, break things. This is not the ideal way of going about addressing what is a very real and valid economic issue that the U.S. faces. And it faces it especially when you consider we're $36 trillion in debt. The interest on our debt exclusively now exceeds the budget for the Pentagon, Defense Department. It's not a sustainable path that we're on. Now Trump has announced these tariffs. We've already started to see countries and companies start to contact their U.S. trade representatives to try to work out deals. President Trump announced, and I'm going to tell you what he said, and then I'm going to tell you what I've been able to find. But he came out on Friday and said, that as a result of these tariffs, businesses that had normally, manufactured or primarily done business outside of the United States have announced $5 trillion of investment in businesses in the United States. And that's all been announced just since he took office. I couldn't really come up with 5 trillion, but I could come up with over 3, which is still an amazing amount of money that will be invested in manufacturing facilities, in jobs in the United States. So the tariffs are having an impact. Are they going to have an impact fast enough? That remains to be seen. But what I do know is that 48 hours after the tariffs have kicked in, the U.S. economy hasn't even begun to feel any impacts. So a 10% drop in the market is at the very least premature. It feels entirely excessive because if history is any indication, in the coming weeks and months, many of these larger countries and companies around the world will be coming to the United States, because there's one thing that we do know, is the U.S. is the largest consumer of goods and services on the planet. We are a consumer economy. It's why it makes up such a big part of our GDP. And the countries that we get a lot of that stuff from, I'll just use China as an example. Our trade deficit with China is larger than the GDP of most countries. And what that means is we buy more of their stuff than they buy of our stuff. And the difference between what we buy and what they buy, that amount of money is larger than the GDP of most countries. China's been taking advantage of us. We've allowed them. They didn't do anything to us. They set their tariffs, they set the rules of the road, and we just accepted it for decades. This is not a new thing. It's not a Democrat or a Republican thing. It's been going on forever. But here's the problem for them. As they've tried to grow their economy, they need us to buy their stuff. There's no other country in the world that's going to step up and buy and take the place of the United States and buy all of the Chinese stuff so that China doesn't have to stop manufacturing and their country doesn't go into pseudo bankruptcy. So this is a global game of chicken, no doubt, right? We're both on the same road. It's a straight, long road. We're heading at each other at breakneck speed, but we're driving a semi truck, and these other countries are driving like Kias. And for those that don't know, Kias typically small cars. So if we get into a head-on collision, does everybody get hurt? Absolutely, no doubt. But the semi truck doesn't get hurt as much. And everybody knows this. Every country knows this. Every leading economist knows this. They all know that these other countries need us to buy their stuff. Where we find disagreement is of course, in how the Trump administration is going about this. And there are very valid views on looking at this from almost any direction. So what as I look at this move in the market, 10% down in 2 days, based upon no real data, it's just, oh no, we're afraid the the tariffs are going to last forever, and the cost of everything in the United States is going up, and we're going to crater into a recession. It's all bad. It's the worst of all bad. Oh no, the markets drop. Well, not a lot of data in those statements. It's a lot of fear. And because these kinds of moves, especially when they happen after hours, it's not you and me, it's not average investors, it's institutional traders saying, hey, we see an opportunity to make money here. If we get enough people to fear, they might get out, the market might go down, so let's help it along. Let's make bets against the market. And so there's a lot of that at play right now. So what I have been telling people for 20 years is you always maintain cash reserves, emergency fund, basically an amount of money so that for a year or two, really anything that happens in the world, you don't have to sell equities in order to live the life that you've become accustomed to. So when times are good, if you've got cash and money markets and CDs and stuff like that, the interest that it earns it's just gravy. But when the markets are volatile, this is when you take the opportunity to say, all right, so instead of selling some of my market holdings to fund my lifestyle, I'm going to use just little bits of my cash and cash reserves, but just do it on a monthly basis, right? On an as needed basis. Certainly don't make any big purchases. This is not the time to be making any big moves. But that's why these emergency reserves are there. If you haven't been listening to me for 20 years, or you're new to these updates, and you don't have the kind of cash reserves that I'm talking about, of course, you need to just take your lumps and you need to get some money out of the market so that you have those cash reserves. But what I'm not advising everybody to do is just go, I'm afraid to sell everything and let's wait and see. Well, if the markets go down, again, since there's no data that says that they have to, on Monday or all of next week or for the next month, the markets could go down. They could. But there's no data that says it has to. So that means that they could, we could be at the bottom right now. The markets could have sold off for 2 days. The institutional people are happy with the amount of money that they made on this, situation. And then they start looking for people that are fearful and are selling, and then they get on the buying side so that they can make it on the, make money when it goes down and make money when it goes up. So don't be that person. Maintain your discipline. Don't be using your cash reserves for anything frivolous at this time. Now is not the time to be, buying a second house. Although, oddly enough, interest rates are starting to come down. So, we're going to see if we're looking at the impact of tariffs, if people that, got, 7% mortgages can all of a sudden refinance and get something below 6%, that money that they're going to put into their pocket can easily help offset any short-term impact to prices from tariffs. And since I started talking about that, let me segue to one other element of this economic plan that the Trump administration has. The markets and the media right now are only focusing on tariffs, and how big they are and how poorly they were implemented. Their opinion, not mine. I'm not taking sides. But what they're not talking about is that it's really part of a larger economic plan, strategy package put together by the Trump administration, and it's being acted on in Congress right now. Excuse me. So let me give you one example. I'm not going to go into endless detail, but I'll give you one example. There are bills in front of Congress right now, the House and the Senate, that in them say that they want no tax on tips, no tax on Social Security, and no tax on overtime. So ask yourself, who are the people who typically are living on Social Security, who are living on tips, or who are living on overtime? That's not the wealthy. So, a 20% tariff, if the price of an Escalade goes up by 20 grand, some wealthy person's just going to be able to pay it, and they will. No problem. But if you're low income or middle income, this no tax on tips, no tax on overtime, and potentially no tax on Social Security means that you're going to have more money in your pocket, that if these tariffs, have a negative impact on prices for a little bit longer, you're going to have the money in your pocket to withstand those increases in prices. So this is not like a scale, typically you get a teeter-totter, right? And, so it isn't that, tariffs, and there's nothing to offset it. There are things that are being done, like these tax reductions, that are intending to, offset the impact of potentially higher prices. But again, media and the markets are not even talking about that right now. And I think that they should be. They should be telling people, hey, look, this isn't the end of the world because. Now, is it possible that the tariffs never go away? That's possible. Is it possible that the tax reductions that are in these these bills in the House and the Senate never get implemented? That too is possible. But we can't make investing, long-term investing decisions based upon what could, oh my gosh, nobody would ever invest if they said, well, but the stock market could crash at some point in the future, so I'm never going to get in. That's not what an investor does. An investor says, what does the data say? And the data says right now that the tariffs really haven't had any major impact. The Trump administration in the past has basically made them fairly short-lived. We don't know if that's going to be the case, but that's what the track record says. So we got to keep watching. The markets, in my opinion, have gotten way ahead of the real world, and that's why I'm advising everybody that I can that can hear my voice that if you've maintained your discipline and have plenty of cash, cash reserves, emergency funds, CDs, whatever, stuff that's not in the market, so that if you needed a little extra money in a pinch, you're not selling equities, then that's my recommendation. This was a knee-jerk reaction to, a set of tariffs that are over the top, clearly over the top. So now is the time to just take a breath. There is no guarantee that the world's coming to an end. As I said, all these other countries need us to buy their stuff, and if they don't do something, if they don't negotiate with the Trump administration on these tariffs, and the high tariffs remain on a country like Vietnam, tennis shoes are going to be hard to come by. But what's going to happen? Somebody in the United States is going to start manufacturing high quality tennis shoes in the United States. And we know that because during the pandemic, with the government telling people you can't do business, close your doors, 6 feet of separation, all that kind of stuff, the U.S. economy found a way to flourish. Not everybody did, not everybody flourished. But when I saw a CBS report that showed, in the weeks and like maybe month or so, 2 months, when the pandemic started, the markets were down by like 33% or 36%, I forget. But then you went out, and within 5 or 6 months after that, the markets had regained all of their losses and then some, and then it went sort of straight up from there. So that's why I'm telling people is, the U.S. economy is the strongest economic power the world has ever seen. We can withstand a whole heck of a lot, and the entrepreneurial spirit in the U.S. is absolutely alive and kicking. So if these other countries decide to, cut their nose off to spite their face and say that they're just going to, fine, we're just going to not manufacture, those countries are going bankrupt because they rely on our dollars to buy their stuff. But trust me, US businesses, they will fill the void. One last thing on the stock market move. One of the things that tells me that this is an overblown knee-jerk reaction is, there's announced that, getting cars into the United States, I mentioned an Escalade, wasn't trying to pick on them, but I saw an interview with the CEO of Ford Motor Company, and he was talking about how, they long ago saw the writing on the wall, and they've been, working hard to get manufacturing back into the United States. And they see this as an opportunity for them to just get their manufacturing as onshore as possible. And they see these tariffs as an opportunity to increase that business for them in the United States. So they aren't going to be subject to the tariffs as like a Chrysler, Daimler or Chrysler, where a lot of stuff is manufactured overseas. Cars that are manufactured in Korea, Japan, right? Those cars are going to be more expensive, no doubt, at least for the short term. So you'd think if Ford Motor Company is saying, look, we're not going to be as heavily impacted by this, you'd think their stock wouldn't be impacted either, but nope. They were down 7 to 10% too, just like everybody else. So, the markets are not being rational. So when they're not being rational, if you want to be an investor, you need to be. So that was sort of a lot. I've been getting calls, emails, texts. If anybody watching this, just wants to chat or has any more questions or wants, some data on, why I'm not pulling my hair out. Well, maybe I did pull my hair out, but why I don't think this is the end of the world. Please just, reach out to me in any way. I'm happy to answer any questions you might have. I just want to make sure that, we are 2 business days into a tariff regime that, if the first administration is going to last forever, and if we jump out of the market, then we run into this, okay, well, when do I get back in? And most people have a really hard time of, well, gee, when the market bounces and comes back up again and they got out, now they're waiting for it to come back down again so that they can get back in. And I know this for a fact because during the financial crisis back in 0809, there were people that I saw, not my clients, who were jumping out of the market, at the bottom, at the end of 2008 and early 2009. And we were buying in January of 2009. Now, don't get me wrong, the markets kept going down for 2 more months after we were buying back in, but the data said the markets were oversold. So we followed the data, we got back into the markets, and then, the markets went straight up from there. And many of these people that got out at the bottom, as the market started to accelerate back up, they just didn't know how to get back in because they were afraid that, well, gee, it went up 30%, but I got out. So if I jump back in, maybe it's going to drop back down, and boy, then I'm just going to get the double whammy. I just can't win. And that's what happens when you let emotions drive your investing decisions. If you don't have a data reason for getting out, there won't be a data reason for getting in. So again, long update, I apologize. We are living in unprecedented times. So here I am on a weekend creating this video. So that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back again soon, maybe not on the weekend, with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.